Welcome, everyone, to our Plenary, Digitisation and Your Consumer. I'm Elaine Grace, the CEO of the Actuaries Institute, for those that don't know me. And look, I feel very fortunate to be chairing this really exciting session today. With the recent rise of AI and all of its opportunities and risks, it is the right time for the profession to be increasing its focus on helping organizations get more value from their data and to do this in a more sustainable and ethical way. Let's not get caught up in words, whether we're talking about analytics or data science or digitization, machine learning, technology transformation, AI, or even generative AI. The point here we want to acknowledge is that this world and the industries we're all working in are being significantly disrupted. Yes, there's always going to be some hype about, is it going to go faster? Is it going to slow down? But the truth is, we're going to continue to see exponential improvements and consequently operations changing over the next 3 to 5 years. Consumers are demanding more. And as we've seen from our other plenaries, our businesses are ripe for innovation. It's about creating new ways to understand and reach your customers, reshaping business models and products, and upending traditional views of their customer experiences. Actuaries have been using data science and machine learning techniques in their work for over 20 years. Of course, we're the original data scientists, but even these, more complex methods, we've been using them a long time. Actuaries contribute strong technical skills, holistic systems thinking, business acumen, and of course have that strong commitment to the ethical use of data in their AI applications in order to add value. But let's not kid ourselves, the world is moving fast and competition in the analytical space is increasing. And the conversations are happening right now at the board and the executive level. It's important for actuaries, each one of us, to be informed, to be able to talk the talk and take advantage of these great opportunities so we can promote our profession to have a seat at the table of these important conversations for transformational change. So, to excite you on the opportunities and to tell you about data science and AI, how data science and AI are informing businesses, we are very privileged to be joined. First of all, I'll introduce two actuaries that Naomi Edwards and I had such engaging conversations with when we did our Asia presidential tour last year. So we have, first of all, Iwan Wono, head of insurances at Grab Insurance Business. Such amazing disruption happening there, and that's what he's going to share. We've got Frankie Chan as well, head of program value optimization, Air Insurance at Cathay Pacific. They know their customers, amazing customer segmentation, but also understand how to value different, different liabilities. All of your air miles, He knows your propensity to use them or whether you're saving them up. And of course, we have Lisa Green, Data and AI Solutions Group Owner, Executive Data and AI at Telstra. She was the inaugural winner of the CEW Actuaries Institute, women leaders in data science and AI. So this was a scholarship that the Actuaries Institute launched last year with CEW, and we've just relaunched. So for all those women out there working in data science, and of course, I guess the issue here is we do actually need to promote more diversity, especially in the data science and AI space, and that's why the Actuaries Institute very much wanted to support this and get involved. But please, look it up, apply. We want more actuaries getting involved this year. So look, the idea of the day is that we're going to ask each speaker to come up, speak for 5 to 8 minutes, sharing their unique experiences. But then we really want it to be Q&A. So please get your questions in. We're going to obviously have them shared back here. And without further ado, I will bring Iwan up, thank you, or to walk the walk.
Thank you, Elaine. Good afternoon, ladies and gentlemen. I have to say it is a tremendous honor to be presenting to you all today. I left Australia about 15 years ago to go find some experience in international markets. And here I am. I'm finding myself invited to share some of our small experiences with you all. So it does feel a bit surreal, to be honest. And I think Elaine was very kind with her words. We're not disruptive by any means, to be honest. We've had some small measure of success, and that's really what we wanted to share with you today. Because over the last few days, I've been hearing a lot of the same themes and the same challenges that we've been trying to address in Southeast Asia. And that is the issues of underinsurance, financial inclusion, and just generally doing better for society. And so before I go into the details of that, probably I need to give a details of what exactly Grab is. To those of you who probably don't know it very well, it actually is a taxi company. So you're probably wondering, what is a taxi company doing in insurance? And actually, I have to delve a little bit into the history of Grab very briefly. It actually started off about 11, 12 years ago in Malaysia. And it was started up by two Malaysians who just came back from the US, and they wanted to address actually a safety problem for women who couldn't find a safe ride home in taxis. At the time, let's just say the taxi industry there was not well regarded. So they really wanted to provide a transport mobility solution to provide safer rides for women and people in general. And actually from there, things started branching out, and it became a super app. So as they started off doing more and more rides, they realized, oh, the drivers needed loans to actually buy a car and mobiles. So they branched off into lending. And the reason for that was to avoid essentially loan sharks. And then from there, they said, oh, we now have an infrastructure for doing delivery, for doing rides. Why don't we adapt that for doing food and parcel deliveries? And so deliveries was born. And then from there, they actually then moved on to say, oh, a lot of our drivers and merchants don't have a bank. Let's expand into banking because there is a synergy to be found there. And that is actually a similar story that we found for insurance. When we did multiple surveys across the last few years, we realized that a lot of our driver partners and merchant partners did not have good access to insurance. In fact, in some of our markets, as much as 80% of them did not have any form of insurance. And as a marketplace and platform whose mission is for financial empowerment and economic empowerment, this clearly did not gel well with our mission. And so Grab Insure, which is the unit that I'm in, was born. And we were born to really help distribute affordable and very, very simple insurance to all members of our ecosystem, including our driver partners and merchant partners. And we do now what's trendily called embedded insurance in the insurtech space, but I believe it's mostly bundled insurance. But really what I wanted to really go and highlight the potential impact of what we're doing is because actually Grab has grown to be a very large ecosystem. It has almost 14 million customers, over 5 million driver partners, over 5 million micro merchants. And again, what I want to highlight is that a lot of these drivers and micro merchants do not have easy access to insurance. And this is not just, of course, a problem for our platform, it's a societal problem. Economic upwards mobility is difficult to get unless they have affordable insurance to provide stability. And that's really what we are coming from. And again, we believe that digitalization and technology platforms such as ourselves have the potential to introduce new business models and make available insurance to segments which were not previously available due to very hard economic reasons. Previously in my career, I was in insurance companies, and I had always wondered why we always focused our attention on the middle class and above. And after learning a bit more, I realized how naive I was. It really is that insurance companies, it's not that they don't have the heart to do it, it's because the hard economics, the transaction costs, the cost of customer acquisition made it impossible for them to offer affordable insurance to the lower income segments. But I say to you now that technology and ecosystems and partnerships have the potential to address these problems. And we've had some small measure of success. We've been doing this now for 4 years. I can't say that our GWP numbers would blow anybody away, but we are very happy with the impact we've had, nevertheless, on individual driver partners and families. And yeah, I think I'll probably just pause it there and hand it over to the next speaker.
Thank you. Lisa.
Yeah. Thanks.
Hello. Thanks, everyone. Thanks for having me. So I'm Lisa Green. I work for Telstra. As Elaine said, I am the group owner for Data and AI Solutions. I have the best job in the whole company because I have all the new toys. All seriousness, effectively what I do in my job is to provide amazing data and AI capability for our business to leverage and generate value. But before I go into that a little bit more, I thought I'd talk a little bit about how technology and my career is centred around the customer. So when I graduated, and very swiftly into a graduateship in banking, which was amazing, and so dived straight into roles where technology was really close to our customers. And as my career evolved, and particularly at this bank that had been and still is a leader in technology, I was able to shift into roles that really made me feel like I belong, which sounds a little bit silly, but I get out of bed every day because I get to use technology to make the lives of humans better. And so in banking, for me, that was, hey, if this didn't work, the parent at the checkout couldn't buy dinner for their kids, or petrol, or buy their new first home. And so it became really personal to me and the job that I did. And we spend a lot of time at work. You kind of want to enjoy it and feel connected. And so when I left banking, I chose to leave banking and work for Telstra. So if you don't know Telstra, you should. We're Australia's leading telecommunications company. Again, I centred around my values around customer and the roles that I've had there. I've had a number of roles, but what's really amazing to have seen the transformation in the last 10 years at Telstra is how the years of investment in our foundations and digitisation of our technology has put us in a position where we can swiftly and easily adopt AI technologies. So we spent a lot of time investing our core, replacing legacy technologies, all of which has been with the goal of improving our customer experience. Lots of investment into our data foundations, which has then led us to be able to use really great new capabilities like generative AI. And I thought that it would be really great, rather than me tell you about what my job is, that maybe I'll show you. There's a little video.
Telstra is Australia's leading telecommunications company. Our ambition is to be an AI-fueled organisation. What I love about working for Telstra is how deeply ingrained helping our customers is in our culture.
I'm super proud to be a part of an organisation which purpose is to build a connected future so everyone can thrive.
It's about people, like our 22.5 million mobile customers and the thousands of customer service agents who serve them every day. These agents need access to a huge technical knowledge base, and customer service histories may be long and complex.
We have been on a journey to simplify and modernize our underlying infrastructure, applying API-first and cloud-first architecture. That underlying infrastructure gave us the capability to rapidly deploy Azure OpenAI to pilot and scale generative AI tools across the company, like Ask Telstra and one-sentence summary.
Our agents use Ask Telstra to quickly find the most current and accurate technical information about our products and services. One-sentence summary helps summarize recent customer history so that our agents can immediately grasp the customer's unique circumstances.
Azure OpenAI and the modernisation of our data ecosystem has been key in helping us quickly, securely and ethically develop these new tools.
In the middle of 2023, we tested one-sentence summary with 100 agents over 2 months. Our agents told us one-sentence summary is a winner. 90% of staff using one-sentence summary needed 20% less follow-up contacts to resolve their customer issues.
We've harnessed the power of Azure OpenAI to elevate both customer and employee experiences. Beyond that, we've laid the foundations to extend the capability to enhance other parts of our business, simplify our products, and accelerate new offerings. The impact is remarkable.
Strategic partnership like the one we have with Microsoft give us the opportunity to ignite innovation and be a leader in AI here in Australia. We are on track to improve all our key business processes with AI by 2025.
It's about enabling our agents, having technology support them, and letting them have that human-to-human connection.
Microsoft is playing a really key role in that innovation and accelerating that journey.
So one of the important things for us, even as a really large organisation, our ecosystem of strategic partnerships is really important to us. But really what I wanted you to get out of that video is that the technology that we're implementing not only helps our customers, but also our people. So our agent experience is so much more superior with this technology. The feedback we're getting from them is amazing. And now we're rolling it out into other parts of our business. Now, the other thing that is core to us, so from a strategy perspective, we recently revamped our strategy, which effectively is to become an AI-first organisation. And part of that, and was referenced in the video, is we have a T25 metric of implementing AI in all of our key business processes. And we're right on track to hit that. So it's pretty exciting time to be at Telstra. And thanks. It's great being here.
Thank you.
Nice. All right. We all buckle up and ready to take off? Yes. Thank you so much, first of all, to Elaine and the Institute for the invite. It's definitely an honor to be here. I'm going to briefly talk a bit about Cafe and what I do in Cafe, and hopefully the elements of data analytics kind of come through as part of the process. And you agree with me that it's fun and engaging to be working in non-traditional area. So a bit of background. So I'm a general insurance actuary by trade. This is my second non-traditional role. So the first one was actually working for a retail bank in Australia, in the pricing analytic function, helping them to basically work out the customer level interest rate for the deposit and lending products. And this is the second part. So Cathay, as you all know, like all other airlines around the world, was deepest hit by the pandemic. I would say Cathay, is probably one of the more hardest hit, if not the most hardest hit, due to the prolonged kind of lockdown of Hong Kong for more than 2 years. As an employee going through that phase, it's an enormous challenge, for everybody. During the pre-pandemic in 2019, we carry 100,000 passengers per day. And guess how much it dropped during the pandemic? The capacity is at less than 5%. And everybody in Cathay remember there was a day in March 2020 where the entire Cathay Pacific network only carried 58 passengers. So it's more staff and crew than passengers. We unfortunately also have to let go a number of people, our crew, and rationalize the contract. But setting those dark times aside, there are actually two business units, that are kind of emerging and bringing cash into the Cathay Group during the period of extreme challenges. And guess what those are? So that's the Asia Miles business, the loyalty points business, as well as our Cathay Cargo business. That has been obviously delivering goods and vaccines around the world. So there's also tough decision was made. A lot of the projects are being axed. But that was also when the senior realized that the loyalty business, the value and the importance of it, and we are being continuously invested. So it's a very, very big contrast looking at our flying colleagues relative to what the division down on the lifestyle colleague, that we are extremely busy during this past few years. We've launched our new branding, the premium travel lifestyle branding of Cathay, to reinforce our role and position of the airline, that we are not targeting everybody, in the market. We are focusing on the premium mass affluent segment. Traffic remains our core, and we also aspire to grow in the lifestyle offering as well, with travel being the theme. So you can imagine, all the proposition around travel is also one that we want to grow. And that's why during the pandemic, a number of things launched, including a new Cathay credit card, Cathay shopping, dining, instant earning, miles partnership, etc. And we've also, during that time, taken the opportunity to rationalize and simplify and merge the two loyalty program of Cathay. So, a show of hands, actually, if you're a member of the Cathay program or heard of it. Great, it's quite a few. Okay, good to hear. So previously we had the Asia Miles program, which is the reward program, focusing for the mass public and just earning and redeeming points. And we also have the Marco Polo Club, which is the flying club, providing recognition benefit for our flyer, that look after our flyers. So we realized that during that time, that the running of the two clubs generates some inefficiency. So during the pandemic, basically we revamped the membership program and bring it into a simplified, clear program that we simply call the Cathay membership program. The group also taken the opportunity during the pandemic to also rationalize our line of business as well into the 4 line of business: the travel business, which of course is continue to be the bread and butter and will be invested; the lifestyle business, the one that I'm part of; the Cathay Cargo, continue to bring in strong revenue, and that's also an area where a lot of the digital and data capability is being invested in bringing out the cargo proposition, including sensor, that are being installed for the group, temperature control product, etc. Last but not least is the low-cost carrier Hong Kong Express, which is the Jetstar equivalent. So that's the segment that we are targeting for the mass public. So, as I mentioned, I'm part of the lifestyle business. So, what do I do? So there are 3 things that I support and look after in the lifestyle division. So the first part, basically my team and I support the development of the Asia Miles reward currency. We are essentially the custodian of the reward currency, working to make sure that a currency is one that is easy to earn, easy to use, and generate attractive value for our members. So what does that really mean? So my team has 2 functions, actually not too dissimilar to an insurance company. I have a pricing team. They actually focus on 2 things. One, first and foremost, actually work out the hard question: how much should the Cathay Group be investing in redemption seats? That's the most valuable product that our member all wanted. And as the name of the pricing title suggests, it works out how much miles is needed, for each and every of the redemption. So this is on the pricing side. And of course, it also look after the conversion rate of the other redemption products as well. We also have an mini actuarial team as well that perform essentially evaluation. So you can imagine a point is issued, and then only 2 things is going to happen to that point over the course of its lifetime. It's either get redeemed, if it get unused following a period of inactivity, then it expired. So you can imagine this is exactly the same task of what a reserving actuary would do, and that's what my team does, working alongside with the external actuarial partner, trying to predict when and how much that redemption will take place. So the most technical formula I'm going to share is essentially the number of miles that is in members' account, times the cost per points, times what we call the ultimate redemption rate, which is essentially in the insurance world, our ultimate loss ratio kind of equivalent. Yep. So the other two areas that the team cover, basically we also look after the earn and burn proposition and focus on the digital experience, making sure that our member are having a seamless experience and they're able to to self-serve. And last but not least, I also cover the insurance product distribution business of Cathay, whereby we basically looked at the growth of the travel insurance and health insurance. So to kind of briefly summarize, I think this is a very interesting, exciting role whereby I get to do something new, something old, and something different. It characterize the two words is value and balance. Okay, it's very important that we specify value in the eye of customer, and that's where once we do that, the data, AI, actually will continue to grow and prosper, so long we can capture that. Thank you.
Thank you. So on the one hand, obviously, different experiences. Like, I wouldn't want to summarize too much because, of course, I know there's so much more depth. But some of the things that really excited me, I guess, about individual, like paying attention to that first slide Joanne showed up, like it's so simple engagement with the customer. It's to undersell it, but it's a wonderful, simple model that engages customer, not kind of so much complexity that turns off the customer, and I think that's what a lot we can learn from. Obviously, Lisa, with her ambitious goal of AI being brought into all parts of the significant parts of the operation, or whatever the code is, by 2025. And with Frankie, I loved this idea of kind of really customer segmentation and understanding your market. So different aspects, but all relevant to every one of you and what will be happening. So if I can just start maybe with Joanne. So what makes this current new generations of digital insurance propositions different from the already existing, direct-to-customer propositions that have existed for many decades?
I think there's basically two main differences.
Yep.
Actually, at the heart of it, it's not that different. I think people call it embedded insurance, but I think all of us here who've been in insurance for a few years, it's just bundling. And so it's nothing too controversial. But actually, where it makes a difference is in the hard unit economics and the customer experience. So in the old days, when we were trying to do bundling or we were trying to do B2B2C, essentially, it was always not as efficient, and that really prevented the product from being adequately value for money. And so now with the advent of new technologies and new ecosystems with large network effects, it's really been able to bring down both the customer acquisition cost and the transaction cost. So as an example, we also actually have an e-wallet in all of our markets. And having this e-wallet has allowed us to create new products which would have been uneconomic before. So for example, we are able to create daily deducting products. If a normal insurer would try to do this, they would have to actually incur clearinghouse costs, which are in a sense, but it makes a huge difference in the economics of a product.
So is this like dealing with the gig economy question?
It is. It's a brilliant gig economy question. So there's a lot of new technologies that are really able to bring down the costs of actually providing insurance and related services to the customer. So I think it's very similar to the point that Mr. Clark made yesterday, that we really need as an industry to find a way to deliver services to our customers at a more affordable level.
So rather than annual premium, you just have your wallet. If you do work that day and need your insurance, it's a daily price and that's it.
That's right. So the reduction in unit economics allows us to create a customer experience which is more customized and actually in relative to the actual gig workers. So gig workers, if you can imagine, they're not paid a monthly salary like we are. They earn on a daily or per ride basis. And being able to match insurance to their basis of earning really increases the conversion rate and stickiness. And it's really one of the key ways we think that low-income earners can access insurance in a more affordable way. And of course, the customer experience makes it simple and transparent for them to buy into it.
So Lisa, so obviously, technology, there's a lot around introducing it and getting everybody to adapt it. Like in that whole change management process, how have you found that you're a big organization, this is something that goes right across the organization? How's that experience been?
The technology is the easy bit. Absolutely, the easy bit. And in comparison. Anyway, it's not always easy. We need really clever people like those in the room. I think where we focused on the people element, so in our earlier journey, we absolutely didn't necessarily focus on all the right things. So we've been on our AI journey for advanced analytics and AI journey for quite some time. And our learnings from that has meant that as we've stepped into becoming AI fueled, the work we're doing around the people transformation is arguably even more important. We recently launched our Data and AI Academy, where everyone across the organisation will get trained, appropriate to their role, on AI. And that's for a couple of reasons. One, we actually want to adopt the technology. Like we're investing a lot of money. We know it can transform our business, so we want people to use it. But we also know that their jobs need to change, right? So the reality is, we spoke about, the implementing AI in all our critical business processes. Well, actually, those processes are changing because we now have AI. So it is a really big human change, and so we've intentionally created programs around it to ensure that we can make the most out of it, but also because our employees are arguably our biggest asset.
And so I guess going back to linking it to the question to around with the product concept of it. So is it changing product, or is it changing, as your video showed, more the delivery of the product that is just much more efficient?
Both.
It's both.
Yeah, it is both. It is both. So yes, there's aspects where we're sort of transforming employee agent experiences, our customer experiences. Obviously, if you contact Telstra and interact with us, you want to have the smoothest interaction as possible and get what you need if you do need to talk to us. But what we're seeing is it's much more than that. So the way we're developing this technology means that actually it's quite easier to shift to different pockets of value in the organisation. So the generative AI capability will be rolled out to field staff as well. Like there'll be our internal staff have similar capability. And there's some newer examples where we're delivering effectively machine learning insights via an API that can be used in the development of new products, or how you interact with your product and the services, or how we improve your experience if something goes wrong. So it really is touching all parts of our business. And for a long time, if you're lucky enough to be a Telstra customer, then
no product.
No. There's a lot of smarts in the network to ensure that we keep the services available and at high quality, and a lot of that is actually powered by advanced analytics and AI. So.
And Frankie, you obviously mentioned, COVID forced Cathay to look at different products and different things. So I guess the thing that I was excited from our conversations in the past is this really improved understanding you have of the customer for Cathay. And of course, we're all part of some airline programs, so that whole propensity to use your points, immediately unfortunately in case an airline falls over, as we've seen, or more, do people keep them and store them thinking they're valuable. But I guess just a question of, how you've led that improved understanding of your customer for Cathay. Can you share that journey with us? Are you happy with the quality of your data? Anything on that?
Sure. I think in Cathay, we definitely put kind of customer first. And one of the very, very first thing that we invest heavily on is basically how, understanding our customer. It has to be the beginning of, everything that we do. So we do that in a few different, dimensions. We've got a customer insight team that obviously does research, does survey. We run, NPS. To basically keep our pulse on our customer satisfaction, and KPI obviously are being shared on each of the metric. I think when it comes to having customer segmentation, I think this is the buzzword that I think a lot of us use. Your understanding your customer. There are multiple ways that we can do that, and we need to be very mindful about the limitation as well about the different types of customer segmentation. So, for the Cathay group, then, we have created, segments that understand the behavior of the travel segment, the lifestyle segment as well, as membership. So they are more what we call as persona, so that describe the characteristic and the behavior of each of the segments. So that's more used for, marketing or comms or proposition, development. When it comes to, offering more tailored service or targeting or personalization of offer, I guess, more effective way that we would use probably propensity model, because that's specifically looking at understanding, who are likely to be attracted to my products and services. For the context of a talk about, during reserving, yes, we do look at, for the general insurance actually, we do look at the run-off triangles about accumulation, the redemption pattern,
Well, this is the great thing. Frankie brought all his general insurance skills to a whole new industry.
Yeah, you realize that some part
stuff.
of that is transferable. That's why I said something new, something old, and something different. But at the same time, you also need a different methodology. So, because there's a whole variety of different members' behavior in the program. Some are less active, some are more active. Some are hardcore flyer. Some are what we call, value maximizer. Who basically earn the points from the credit card. And then not spending a cent on the cafe flights, and then redeem 100% of the ticket, of our metal. So what we do is that, we trying to cluster the members' behavior of the entire portfolio, as All Actuaries do, we form a homogeneous group. So we basically divide it up into, say, up to 30 groups of low redeemer and high redeemer. And then we basically build that run-off pattern of each and every group. So that's specifically for that context.
So I think the interesting thing here, I guess, amongst all of you, you're saying is like when you collect so much data now, which is interesting, And one person I spoke to the other day is we need to be careful that all of this amazing technology that's being introduced sometimes for operations doesn't always lead to great analytics, because we kind of sometimes want to just say, well, what does it mean? And then it brings into this question of, well, what should we be looking at and what should we use this information for? I know we've had this question around, so Grab has a lot of information on people because they have everything, where you're going, what you're spending on, whatever. But maybe you want to talk a bit about their social decisions on what they're allowed to use that data for from a Grab insurance perspective, and what they've decided not to.
Yeah, so I think one of the more conscious decisions I think we made in our early life is that actually as a data-rich company, there is the temptation that we could do, for example, variable pricing, or we could do, as you might, the bad word for it, of course, is price discrimination. But actually, over time, we've developed a philosophy whereby we take the extreme opposite approach. We actually now realize that for doing digital insurance, especially for lower income segments, and especially for us, whereby our selling medium is actually only this phone screen, we don't have the luxury of giving them a large illustration or a large PDS. We literally have to communicate everything through one or two screens at most. So that's really forced us to take the opposite approach, where we adopt a simple and very transparent pricing. So for example, our travel program literally only has 4 prices. It depends on which region you're traveling to, you get 1 price per day. So you know exactly what you're paying for. For our personal accident and critical illness products, there's only basically 3 prices, 1 for each age band. That's it. And you will know exactly what you're paying for. And that is really for us the hard learning that we've had to find when we try to sell anything that is a little bit more complex than a simple embedded travel. Anything to do with personal accident or anything protection-based, it needs to go towards maximum simplicity. So for personal accident and CI, for example, we've cut down the benefits really to just 3 lines. We no longer have a personal accident plan that has a page of benefits. It literally has 3 lines. And so with that, we've taken the conscious decision to not do any kind of price discrimination. We do use some data for marketing and effectiveness, but the primary purpose that we would use our data is to bargain with our insurance partners. And just to make it clear, by the way, we are not an insurance company. We are a distributor, but we do have some say in the way the products are created and priced. And so what we actually go to our insurance partners is to use the data to try and bargain for the best value that we can get for our stakeholders. And really, we would use that saying, look, even though some of these low-income merchants, for example, they don't have much of a history, but actually we have a lot of history with them, and we have our own credit models, we have our own small underwriting models, and we're telling you, please trust us They are good risks. Please give us a better price than you would normally give in retail. And that is actually one of the great value adds that we believe we add to our stakeholders, in that we're able to use this group bargaining power backed by data to get a better value for them.
And I think this is the thing that it interests me, and I'm not sure whether it's quite hit Australia yet, is this disrupting force of you have such a direct relationship with the customer that the distribution model seems easier, but then you're going, no, on behalf of our customers, we'll negotiate a good deal with the insurers, and you go, and we want it simple and whatever. So whereas I think, we had a discussion on Monday where it's like, how do you distribute products to customers? How do you get engaged? And this is obviously, I guess, that fear with the technology companies. Is it the Google that have the relationships? Who has the biggest relationships with general people? And obviously, as a taxi company, you do.
Yeah, but I think just to be also clear, I think some of us may be doing it because we want to serve the customer well, but it's also because of hard market discipline.
Yeah.
In a lot of our markets, there are always alternatives. You can always buy online from other indirect insurance players. There are other comparison websites. In order to be competitive in the digital space or in the B2B space, there is a discipline where you need to offer a good value product. If you want to do digital, it doesn't mean that you can set a really high price and just trust it'll convert. To get that conversion, you need to offer a great product with product market fit, and you need to offer a customer experience which is compelling and easy to go. And let me tell you, the one thing I've learned is that simple actually means really, really hard. It's actually much easier to design a complex process than it is to design a simple process, and I'm pretty sure Lisa has probably understand this better than most.
Yes.
Any thoughts, Lisa?
Yes.
Any different approach that I guess Telstra is taking on that?
Like when it comes to data, the data that we collect, the data that we store and we use is not our data.
Yeah.
It's your data. And we take that responsibility really seriously. And that's as the data itself and what we collect, how we collect it, how we store it. When it comes to AI, then how do you manipulate that data and what it's used for? And that builds in, that responsibility. Yeah, as I said, we take it very, very seriously. And so it's made it easier for us, I think, on the responsible AI journey, because that's kind of been part and parcel to what we've always done from a data perspective. And so our policies and processes around the use of AI are specifically in place to ensure that just because you can doesn't mean you should.
And we're excited Chris Dolman, actuary now, is working with Lisa, and so is bringing a lot of those thinkings from insurance to telcos. Look, I have to, oh yes, please, and then I'm going to go to your questions because I know we've limited time.
On Ivan's point, I think just a bit contrast, right?
Yeah.
So on one hand, he's talking about his product, it's very simple pricing. We are exactly the opposite. So for travel insurance, for example, number one, because we are airline, we have even no two seats are the same price. So dynamic pricing, and dynamic offer are basically our bread and butter. And so and that includes the distribution of travel insurance as well, whereby we work to kind of come up with a tailored price, for our customer to optimize conversion. And how do we ensure that the price is reasonable and competitive? Of course, we also not only do we use the modeling to tell us what is the appropriate price point. It's important that we also do regular price testing as well, to ensure that our parameter is appropriately calibrated.
So very different models. Simple, one price, variation, individualized customer experience. Let me just go to these questions, otherwise I'll be in trouble. Sure. Lisa, Telstra, like a lot of insurers, has a long history in Australia and presumably a lot of legacy processes, systems and practices. Do you have advice for insurers on how we can manage the hindrances of legacy in implementing new tech?
That's a great question. So my observation of certainly major companies is that's been the biggest unlock, like the investment in the core. In the context of banking, the core in banking for us, it's centred very much around our CRMs and modernisation of those. The thing that's interesting with Telstra is we're an ex-government organisation, and over time we've kind of been brought together, and so it's meant that we had a lot of duplicate CRMs, many CRMs, ordering systems. And so the last few years, we've been effectively a large digitisation program focusing on our consumer and small business segments, and also now our enterprise side of our business. And it has been the biggest unlock for us. It is really difficult getting high quality data from A to B when it is so complex. The data spaghetti is challenging. And we're not done.
And do it.
We're not done. We're not done. We're not done. And I think, and that there's always going to be, especially if you're the size of Telstra, that it is the number of years that it takes. But if I focus on sort of one of the things, so the availability and the quality of the data has been one of the biggest unlocks. But as an organisation going down that journey, that's never going to be perfect. No. And you can't afford to wait. So you kind of got to pick how do you balance the two? Yeah. And like I said, high quality data is an unattainable task. So you've got to choose what the most important things that you need to do. What are the most important parts of your business that you want to generate value or optimise your business or improve customer experience or employee experience?
Right. So for Rowan, did you arrive the current product design and distribution model for the gig economy workers in the first try, or did it take a few iterations? If the latter, what are the key learnings from the iterations?
Oh, it took a lot of iterations and a lot of blood, sweat and tears. The amount of products that we've cancelled, I actually can't keep track of how many of them. We've had some good degree of success now, but to be honest, we've had some success, really, some of it really down to pure luck and also down to pure persistence. So I can't share any of our conversion numbers, but they are very satisfactory to me at the moment. A lot of the key lessons we've learned actually has to come down with simplicity and transparency. And actually, this is one of the challenges I guess I want to pose to the reinsurers here, for example, is that in the past, one of the key lessons we learned is that not to have underwriting questions. I realize this is going to be heretical, probably to a lot of the underwriters here. But what we found, for example, a rule of thumb is that every underwriting question reduces the conversion by about a third. And so we've really had to move to a model, in order for our own economics, is to simplify the product as much as possible. Another key lesson is what I mentioned before, is that you need to simplify the benefits to the core benefits. Digital, you cannot sell a complex product with multiple benefits. You have to focus on the customer need. And I think that brings me to that third point, is that product market fit is a concept that's very common in the tech world, but I don't think it's common enough in the insurance world. It's really understanding the customer and what is the underlying problem they're trying to solve. So actually for gig workers, it's very simple. They just need a range of solutions that help them to get back on their feet or just take care of them if something happens. And so we really focus the solutioning that we do with our insurance partners on delivering just that key core benefit and then figuring out how to best deliver it to them. And we've had to do many experimentations. So we've also, for example, learned that gig workers and merchants, they actually value flexibility the most. They cannot actually be sold monthly insurance products whereby if you just miss out on one payment, the cover is cancelled permanently. You can't do that. So we have to be a little bit more flexible and work with insurance partners to say, okay, can we have a bit more of a premium holiday approach? Can we have a reinstatement approach, which is more flexible? How do we control the risk? And most importantly as well is how do we deliver it in terms of business model? Can we, instead of actually just deducting it from their bank account, can we deduct it directly from their earnings? Can we do it a daily or per trip approach so that it matches their earnings approach? So it's a lot of experimentation. I think probably that's the key point I want to deliver. We've gone through a lot of failed products. So for example, one of our products is personal accident in Singapore. It sounds like a very simple product, but we are now, after 4 years in, on our 7th iteration. So, and then for our critical illness, it's actually about a third or fourth. Our term life, it's on a second.
You'll turn them off for doing innovation.
It's really difficult.
This is an interesting thing. So, and maybe I'll pass this question to both of you. This obviously takes a certain personality type, grit, persistency. Maybe I can ask Frankie, and I'll keep it short because we're running out of time. So please, quick answers. But what are the personality type to really get the cut through to the business and keep positive? Any?
Right.
tips?
I would offer, the four Ps. Not the 4 Ps of marketing. So I guess passion is very, very, very important. You need to have to love what you do, and purpose. Right. Why am I doing this? Have you found purpose? Perseverance, right? Especially as actuaries, in entering into the non-traditional area means a lot of learning of the domain knowledge that we have to acquire. So we do have to persevere, but a lot of us has passed our exams, so I think that part is tick. And last but not least is pride. Have to be proud of what you do.
Yeah, I mean, I think, so from a mindset perspective, what's interesting, and maybe in this field, is experimentation and it's kind of fundamental to what you do, right? So it actually makes it quite a right place to drive some innovation as well because of that. But the biggest thing, I think, is if you lead with value in mind and constantly chasing value, then it drives you to want to persist. It drives you to want to produce a better product. It drives you to stop and go, actually, there isn't value. I'll go and, let's focus on the next hypothesis. So I think, certainly in this profession, it's actually kind of a really good fit.
We don't. Sorry, Red, I've been told it's 0 minutes, so can I get some final feeling from you?
Okay, I think it's probably going to be a bit controversial.
Yeah.
So actually data science and AI, these are fantastic things to have, but actually before looking at them, and they can add tremendous amounts of value, the most actually important thing is to find a business model and product market fit that can then be enhanced by data and AI. Data and AI will never solve and silver bullet to solve your problems. You need to have actually a fundamentally good business and customer need that needs to be met first. So I think that's usually the advice I give to most insurtechs that are also starting out. They actually need to have a customer need and a customer problem that needs to be solved first. And I don't see that in a lot of the insurance digital programs that I see implemented. They just say, oh, we want a shiny new toy, let's find a problem to solve with it. You've got to have a problem to solve with a shiny new toy first.
Right. And look, I'm going to go over time a little. So one last final word to everybody of encouragement to this wonderful audience, how they can get involved, why they should be excited.
I'm going to do the plug for the amazing women in the room. Make sure you apply for the scholarship.
Fantastic. Frankie? Final words of wisdom?
Stay curious.
Stay curious, correct?
I think probably that insurance, I think, is a noble industry, but I don't think it's been having a good press in many parts of the world, especially here in the last 10, 20 years. So I think what I would encourage is that actuaries should get more involved, not just in the pricing and numerical work. In fact, I think we have a lot of value to add actually being in the management and moving to adjacent parts. I think, frankly, for example, a lot of the decisions that we need to make in order to deliver customer value, it's not driven by actuaries. It's driven by management, distributors, and partners. So I think it would be great if more actuaries would join these adjacent units and drive more change that way.
Look, I think the wonderful thing here is it just shows what opportunities for actuaries to go right across different areas in your business, across different business areas. The world is changing. We definitely have the skills, the capability, as you said, stay curious. Think about models, we have the ethics. So, and obviously the Institute, look, we're running great stuff. So please get involved. Tell us what you want. We're excited by the future transformation that's happening, and we look forward to the journey with you. Thank you very much.
Thanks, everyone.